Good day. Ira Epstein, and here we are with an abbreviated trading session. And this is for Monday, the 3rd of July, 2023, day before America's Independence Day, July 4th, which is tomorrow. Before we get too far and I go through the markets in this metal market wrap-up, I want to remind you of something. For Independence Day, we have the sale. Take advantage of it. 50% off any of our research products. That's the morning subscriber video, the ETF video if you want that, the full research. Those are the products that are involved in this. This is for new and returning members. It is not for existing members. It expires right in front of you very, very quickly here. And if you think about it, an introductory price, as an example, is $7.95 for the morning subscriber video. It's half of that. You can't go to McDonald's and get this. In other words, this is going to be less money than you going to McDonald's for your sandwich, your small fry, and your Coke, and you're going to get 20 videos. Now, the 1 year, you take the $156 price, cut it in half. $78, you have the deal of deals. This won't last. It's coming on right now. It's my way of saying thank you. Thank you, America. All the good things. You can go to our website at iraepstein.com under research. You don't need a coupon. We've set the system up to take everything right now. Pricing will be there automatic. You can click up here at any point. An icon will appear there. All right. So in looking at the markets, you still have the metals basically open, but they closed here. Remember, they settle at 12:30. They're going to finish trading early today. There's nothing that I see here other than the market getting a little bounce in the copper, a little bounce in platinum. It's so overdue. It has been a one-sided event in the platinum market. I can see that bounce happening. The gold's basically unchanged as they're coming to the end of the currency trade, as you can see. Not much movement there whatsoever. I didn't expect it. Today's one of those lost days of trading. Everything will pick up again as we come into the trade on Wednesday morning. Now, the markets will open again tomorrow, and I want to remind you, you have some reports coming out Wednesday. You've got Redbook Group. They'll come out with their retail sales. Factory orders, and that's going to be for May, come out at 9 o'clock. We get the all-important FOMC minutes. Everybody will be scrutinizing that to get an idea as to where the Fed is heading, because none of us understood this pause, skip, whatever you wanted to call it. And API numbers will come out at 3:30 in the afternoon on Wednesday. All right, so let's take a look at the chart action, and let me get you there right now. Here we come. There we go. All right, so in looking at them, we reviewed what we thought was going to happen there. You can see the market is staying under the 18-day average of closes. This is the weekly chart. I take that back, the 18-week. So the bias stays down. I just saw U.S. coin sales of gold coins that were coming out. It's the lowest number in years. So people aren't buying an awful lot of this. Why would you when you can get 5 to 6% return on your money by just putting it into a CD or something? It just doesn't make sense. And the Fed's determined to break the back of inflation, so it's got a lot of headwinds going for it. The trend is down. The bias is down since you're under the 18-day average. I thought the market might want to get down and challenge the possibility of one of two numbers. Either the 200-day average, which is now coming in at 1897.30, or the lower Bollinger Band, which has been hit over and over, and it's coming in at that number. Now, you got up today to 1939.90. Not that high. Still didn't take out the 1943.90. If you take that out, you probably go to the 18-day average and have to do what we'll call a reset. If the market's going to fail here, it won't take that out. And what it'll instead do is, as we reopen in the markets, I think it's tomorrow night that they'll reopen them. If you start taking out today's lows, then I think you're going to make a run to that lower Bollinger Band. So I think it's going to be an important evening come Tuesday and Wednesday trade. In terms of momentum, I'm not that interested in new shorts when you have a market that's oversold. Oversold tells me, okay, the money's been made, time to go back, let the market get away from that in momentum and start afresh, and you're not there. The gold-silver ratio, as long as you stay over the 18-day average, then the gold is stronger than the silver on a relative basis. And you can see silver's been fighting one battle, fighting at the 200-day moving average, oversold market, Nothing that I'm seeing there that would get me super involved. In the copper market, it's a big swing trade. What do I mean by that? You got up here, if you look back about a week and a half ago, to the combination of the green line, which is the 100-day average of closes, and the upper Bollinger Band. Everybody was hoping China over that weekend, if you will, was going to do some real important stimulus. They did nothing. Their minor moves that they made to help you buy more electric cars there, and 10 basis points off of all kinds of interest rates, 10 basis points, that's not very much. The market gave that all back, and now it's giving you a bounce. Now, the new resistance in the market should come in between 382, the 18-day average of closes, and 382.50, which is this number would be the 200-day average. So I'm going to look for the battle there and the market from there to tell us what kind of trend can develop new. I think you're on the verge of trying to lose the embedded reading here. Don't get me wrong. You haven't lost it. You're still at 16. And I don't get that disease called stochasticitis where one moment it's losing it, the next it's not. If I come out, it's because I want to come out. This isn't saying to come out. You're getting a bounce in an overall bearish market. I think the tone of this will be determined come Wednesday's trade. We get a rally. Does the rally lose that reading? If it doesn't, then I think it's a sale again. If it does, you'll know that early on because the way that you finish the day up near the highs of the day, you're going to lose some of that 16 reading right off the bat when you reopen unless there's some event that happens over the next 24 hours that just makes the market open lower. I don't see that right now. In the dollar index, while the trend is up, more and more traders are starting from everything I'm reading, abandoning their super bullish ideas here. Traders are becoming more convinced that the Fed's in the last 2 rate hikes, if we get those 2 hikes, period. The naysayers have been saying that we would never go all the way the Fed does. But remember, you're 5.25%. Let's give the Fed credit. Those naysayers weren't right in that tone. They were 100% right in buying the stock market all the way through. I don't recall seeing a market this powerful. And I've got to tell you, I'm not with the camp that keeps calling for a top in the stock market. Prove it. No longer do I believe the fact that earnings will be bad, that the recession's going to take the market down. I don't see it. The market even today absorbs a terrible set of ISM factory numbers. A terrible set. One of the worst around. It didn't even pay attention to it. So until it pays attention to bear news, bull news will rule the day. And that all has to do with this market right here. So you put it together, you get your game plans, you trade it accordingly. Now we don't have to worry until the end of the summer vacations going forward, which I think is going to be the way you want to go. What else do I want you to do? Take advantage of this Independence Day sale. Remember, go to iraepstein.com. Under research, you can click up here. You have a great 4th of July. I'll see everybody Wednesday. Take care.